The word that stands out for me is caution. So let's apply that to a couple of parts of this narrative. The caution. The loan losses have got better. You use the word cautious. As we go into COVID 2, lockdown 2, can you really call the bottom of this loan loss provisioning cycle as you sit there today? Good morning.
Yes, good morning. Look, we're pleased that impairments have moderated this quarter. We had impairments of little under 300 million euros. That's well down from the 1.8 billion that we incurred in the first half of the year. So we're pleased that impairments are lower. We expect impairments for the second half of the year to be lower than the first half. And indeed, we expect impairments next year to be lower than this year. So whether we're at the bottom or near the bottom, it's hard to say. We're cautious. We see positive developments on vaccines, but the economy remains uncertain. And certainly our core markets reliant on government support. We'll know a lot more when that government support starts to phase out through next year.
So it was a good quarter in terms of loan loss provisions, but you're still quite cautious. What about the dividend? Will you pay a dividend for 2019 once, of course, the ECB language comes out and they potentially lift that in December?
Yeah, you're quite right. So the ECB has a recommendation in place. For 2019, we declared a dividend in February, but we didn't pay it and we reserved it. And it's a quite important part of our capital right now. What we've said today is that we'll consider the payment of that dividend at the end of the year, so that's February this year, depending on conditions and prospects at the time. So it's just too early. We're being cautious, you'd expect from a bank, and while we're hopeful that the economy will respond to the developments in vaccines and so on, it really is early days.
Clifford, isn't the truth that none of us really know how we're going to come out of this, vaccine or not? There are parts of the economy that are permanently scarred. So what do you see changing the most in your business post-COVID as you go into 2021, hopefully with a vaccine?
Yeah, in terms of our business, I think in common with many sectors, we've seen COVID accelerating trends, accelerating developments. So in the Netherlands, which is our home market, we've always been ahead on digital developments, and Dutch folk of all ages, like using their apps and digital technology. And we've seen a step change in that adoption. So I do expect more digital banking, more video banking, like we're doing right now. So nearly all our mortgages are conducted via video banking, where people like the face-to-face service, but they get that in their kitchen and they don't need to go to the branch. And what we've seen in the Netherlands, with rates low, house prices, house volumes have continued, and people are quite happy and prepared to make really big decisions through video banking without coming into a branch, and we welcome those developments.
But are you still on track for your a little bit over 5 billion euros in annual cost target for 2020?
Yes, we are, and you can see we're very much on track for that 5.1 billion cost target. That in the digital world that we're working in, it meant quite a bit of disruption at the bigger part of the year, but right now, clearly none of our staff, or very few of our staff, are travelling. We've progressed with our cost-saving programs, so we're pleased to say that we're on track for the 5.1 billion. We're also working towards finalising our strategy for an investor update at the end of November. And at that point, we'll give more guidance on how we see costs going forward.
David, given the turbulence of the year, do you think that you can still hit the 10 to 13% return on equity that you had, and the cost-income ratio, I think it's 56 to 58%. Do they still stand? Will they be achieved?
We gave those targets some time ago in a different interest rate environment. And clearly this year we're not going to be hitting those targets given our performance year to date and our outlook for obvious reasons. And we'll plan to give an update on targets at our investor update at the end of November. I think we're pleased to do that. We have a relatively new CEO, and he's keen to set out his vision for the business, despite the uncertain times we're in. We think it's really important that we set out.
Clifford, can I just push you a little bit? I know that you're going to update the market, but just How much are you going to miss these? Is it going to be a sub 10%? Are you going to burst on the cost? Just give the market some indication.
Yeah, look, as I said earlier, yeah, no, I think you see consensus out there which has us, close to break even this year. So that's close to zero ROE this year, 2020, and the cost income ratio, clearly higher than that range, reflecting pressures on income. I think that's in common with all banks across the sector. I think the key thing for our investors will be what's the long-term outlook, and we'll update on targets as well as our broader strategy at the end of November. But what I would say is that we need to be realistic about calibrating targets in what we still are in the middle of a pandemic, and we'll be focusing on those things that we can control as a bank: our costs, our digital programs, our target client segments, and so on. We've recently decided to focus here on Europe. You'll be hearing more about that and how we can win in our focus markets. But clearly, in an environment where there are many things we can't control, we'll be cautious about targets, and I hope our investors will be realistic about what they expect at the end of the month in that context.